I sacrificed a lot growing up in my 20s, but I really like nice things, and I think you deserve to reward yourself, whether it's a nice watch. I was talking with somebody that was telling me about Richard Mille watches, which I just found out a used Richard Mille watch was like $179,000. But whether it's a Richard Mille watch, whether it's a Lambo truck, whether it's a Bentley truck, whether it's a Rolls Royce truck, whether it's a Ferrari, a nice house, whatever it is, this video is for all my entrepreneurs, guys. So you deserve to get that stuff. And even if you're an up and coming entrepreneur and you want to trick it on yourself, I recommend you do it. I think you should, because what it's going to do is give you a different vibrational energy and allow you to attract money at a higher level. But before you just go and you take that cash, I want to make sure you do it strategically. So what I'm going to do right now is break down how you can strategically even before you go blow a bag, but pay yourself first by becoming your own bank, right? You want to become your own bank. So if you already got the cash and you take that cash and you go buy something, you get the thing that you're buying, but you no longer have the cash. Right? The reason why banks don't lose money and they make so much money is because they loan money out and then they charge interest back to themselves. So what we got to do is figure out how can I strategically take that cash and become the bank. Now, this is going to assume a couple of things that I'm breaking down. Number one, your business is already profitable when it's making money. Number two, you already have a scalable business. Number three, you may already have real estate transactions going on. You may own some real estate. You may already have an investment portfolio. I went to a conference before and they were saying, look, whatever it is that you buy yourself, buy some stock in that too. So all these kind of principles financially you want to do. Now, that being said, let's just say you still got the cash and you want to go do something with it. At a really, really small scale, the very first thing you want to do is set up a cash value life insurance policy. Specifically, I'm going to go ahead and just put it out there. There's this company called Mass Mutual. They have a high early cash value policy. If you want the plug on that, I'll put you in contact directly with my personal insurance advisor who helped me set mine up. That being said, the reason why you want to get one of those type of policies specifically is because those policies allow you to contribute directly to cash while having life insurance at the same time. So this kills three birds with one stone. Number one, if you pass away, your beneficiaries are going to get the death benefit of life insurance. Number two, you can put money directly straight towards cash value, and it's going to give you a guaranteed 4% interest rate and typically a 6 or 7% dividend. Powerful. Number three, that money is going to grow tax-free. So anytime you want to access that money, you can access whenever you want. You don't got to pay no taxes on that. So that's a huge trifecta. So instead of having your money sit in cash in a bank account and then you trying to burn that cash on something that's not going to return back to you, put it inside this life insurance policy. Now, here's where it gets good. Now, let's just say you want to go buy yourself, you want to go blow a bag, $10,000 on some things, whether it's a purse, whether it's some shoes, whether it's a watch, it's a Rollie, whatever the case is. Let's say it's a $10,000 bag. Well, and you got the $10,000 cash. Well, what you want to do is put that $10,000. You want to structure it to put that $10K in one of these life insurance policies. And the reason why is because you can take a loan out from that life insurance policy. Let's just say you take a loan out from that life insurance policy for 10 racks. When you structure one of these cash value life insurance policies up, called a non-direct recognition life insurance policy loan, that means the life insurance company is just going to use the 10K as collateral, but they're going to still allow you to keep earning interest and dividends on the 10K as if you never took the loan out. Then what you do is you got the 10K structured in the policy. You're still earning that 4% guaranteed, that 7% dividend, depending upon how the company does from a performance perspective. But then you take the 10K, you buy that thing cash, and now your money is working for you in this life insurance policy, and you got the thing. And you do the next best thing. You start paying yourself back with more interest because now you got the thing, you got the policy, and your money is working for you. That's how you want to do it. You start with the 10K, then you can go up to 50K, then you can go up to 100K, then you can go up to 500K. So instead of going out and buying that car cash, I'm not saying not to buy cash. Hell, buy the car cash. But before you buy that car cash, take it out from your own life insurance policy, because I just broke down, you're going to get interest and dividends, tax deferred, all that good stuff. Then you pay yourself back. You secure legacy right now. So should something happen to you, your beneficiaries are taken care of, but your money is still working for you, and you got both, you get the best of both worlds, and you became the bank. And then take it one step further. The biggest thing you want to do is you not necessarily be the one that owns that life insurance policy. Now we're going to get into some real wealthy stuff. You want to have a trust that owns the life insurance policy, and you want to make sure your trust has beneficiaries to take care of that should something happen to you, and you are going to be set up as a trustee. That's some deeper level stuff, but the first step is get the cash. If you already got the cash, structure one of these policies. That's an infinite banking policy. Buy that thing cash, pay yourself back, make the money work for you. Why you're gonna enjoy that luxury that you're already gonna do anyways. That's all I got on that.